So this feeling follows me wherever I go. I believe in miracles, but I have a feeling it's time to try. I need to believe in the ways of magic, but I'm beginning to wonder why. Good morning, everybody. Happy Thursday. It's December 1st, 2022. Great to be with you today. My name is Bob Lang, and it's time for our Daily Bite. Sorry, we're running a little bit late this morning, but I had a couple of things to take care of before we got started. Excuse the bad hair this morning. I'm getting a haircut later on today, so I think next time we do the Daily Bites, you'll be happy to see that I'm in a lot better condition with my hair. So anyhow, great to be with all of you today. So let's talk about what happened yesterday and what we have to look forward to over the next couple of days. So obviously, you can see from the futures chart over here, we got a big pop here this morning. That was due to the PCE. Numbers came in a little bit lighter than expected. What is that? That's personal consumption expenditures, which is a number that the Fed really pays attention to on a monthly and quarterly basis. So lighter numbers, kind of confirming what Chairman Powell was trying to hint at yesterday, with lower rate hikes going forward. And he even said yesterday that that could start in December. I'm not so sure about that yet, but let's see what happens. The futures market is still telling us that there's about a 1 in 4 chance of 75 basis point rate hike. Maybe some of those people are still hanging on due to the fact that we do have some releases coming out, important releases, which have good inflation information tomorrow, which is the non-farm payrolls, which is going to talk about wages and wage growth. And we'll also have another CPI number and PPI number coming out before the next Fed meeting, which is around the middle of December. So it'll be interesting to see what the futures market digests those numbers, and if the percentages go down and the actually, what I would like to follow is the Eurodollar futures. The Eurodollar futures move up, which means the rates are going down. Then that's going to be another clue that's saying that, the market is expecting the Fed to only raise, say, 50 basis points. Now, in context, what does this tell us? It tells us basically that instead of a 75 in December, they could go 50 in December, 25 or 50 in February, early February, which is the first meeting of the new year. Does it really much matter in terms of the timing? It may make a little bit of a difference, but it's the pace and the rate of change that people are starting to get interested in and figure out and see that okay, well, this is going to benefit us in a way that for the equity markets, especially if the Fed is slowing down on their rate hikes. They are still going to keep rates higher for longer, I believe, at least into 2024. I know that the market is starting to price in a couple of rate cuts in 2023 towards the back end. I think it's well premature to be talking about rate cuts, but we got to wait and see what the data looks like. And I think if there's a better number in CPI number later on this month, in about a week and a half, that could start that trend moving in the right direction. So we'll have to see. Yesterday, big powerful rally after the Fed chairman gave a big speech, and we did see some heavy volume coming in towards the end of the day, and we did see a move finally above the 200-day moving average, right? So let's take a look at a couple of charts here, and one I want to show you here is one that I've been kicking around quite a bit, and you can see this is a channel that I've drawn from around towards the end of well, the bottom lower end comes in from the end of 2021, and we do have the top of the channel, top trend over here, which is the connecting lower highs from the start of 2022, right? And I did mention way back when we came off of this level over here, which is about the 3600, 3550, 3600 level over here on this line, that we had a possibility of getting up to that top trend line. And sure enough, we got there yesterday, which was right around the 4100 level. And you can see the circle, right? I've circled it as well too. So this is a weekly chart, and you can see that this channel has been pretty reliable at holding prices in here. We did come up there to the top of that channel back in, when was that? Back in summertime, July, August, and we came back down quite sharply, and we've been on a buy signal ever since we turned from purple up to pink. Now, once we get up to pink is, of course, still cautiously bearish. We get to brown, which is right over here, and then we get to teal. Then we're bullish on the market trend. So we could get that turn in another couple of days if we certainly, if we make it through the end of this week, between today and tomorrow, we could certainly get to those bullish readings, and we'll see how it goes from there. But if we get a candle that looks something like this, be careful here. So we do have a couple more days of market action to handle over here between today and tomorrow. Again, big important jobs number coming out tomorrow morning, and a lot of people are looking for about 200,000 and over 220,000. The ADP number came in a little bit lighter yesterday than many were looking for. They're looking for 200,000 new jobs in the private payrolls. It came in at 120,000, but the wage component was much hotter than expected. So again, the market is just seemingly ignoring this stuff here. Now we have one thing we have to remember, though. We have two forces that are coming together here, right? We have positive seasonal trends coming in, and that brings a lot of buyers off the sidelines and looking to finish the year strong. And then we have the economic data, and the inflation data, which is coming in strong for inflation, weak on the economic side. So we have these two forces coming together, and they're fighting each other, right? So that's why you get days like Monday where the futures were down 60 handles. It was basically a risk off day the whole entire day. And if you take a look at what that looked like on the Vold over here, you can see this was Monday. Tuesday we crept up a little bit, and then of course yesterday we started downwards to near the zero line. Then all of a sudden, when the Fed chairman spoke, it just shot right up here, and you can see the ADD line really improved. We went from nearly a trend day down over here on the bottom to a trend day up, and volatility plunged. Now let's talk about volatility for a second. Why did it go down so much yesterday? And the reason for that simply is that once the news is released, there's no reason to hold on to protection, because the uncertainty is gone, right? Once the uncertainty is away, people have nothing to fear. They can just take a breath and exhale, because the news is out, whatever the news is, if it's good or bad. And listen, if you listen to really closely to what the Fed speaker, Fed chairman said yesterday, it wasn't all that dovish. But the market interprets things differently. And as I said yesterday on this Action Notes Plus rundown, I said what the market's interpretation is of it is completely different than what the reality could be. So they were not very dovish at all. He was actually rather hawkish, but he was laying the groundwork for, listen, if inflation starts coming down, I'm justified for lower rate hikes. If inflation continues up, well, we're still raising interest rates, so he's got cover on both sides. Chairman Powell is a master hedger, right? He used to work for a big firm, big Wall Street firm, so he knows how to hedge himself, hedge his bets when he needs to. So I think that this is what happened yesterday. So going back to the charts over here, again, we looked at the S&P 500 right up to resistance here. We did notice that yesterday the S&P 500 ran up and went right through like a hot knife through butter, that 200-day moving average, 40.65 or so. That 200-day moving average had been big resistance all year long. We haven't been above that 200-day moving average since March of earlier this year. So we'll see if that move sticks here, and certainly that would be a feather in the cap of the bulls if going forward, if we end up staying above that 200-day moving average. But if we don't and we come back down over here, then we have some targets down below that we could certainly take a look at 3,900 again. That 3,900 level, folks, is a very, very important level for support. And I think as we come back down, if we test that level again, as we did earlier in the week and late last week, we're going to see a lot of buyers start stepping up and defending that level. If that ends up, falling by the wayside, there are far lower targets. In fact, probably the lows of October, just under 3,500, and maybe even a bit lower than that. But first things first, we got to see if that 3,900 holds up strong. The 20-day moving average yesterday moved up above that 3,900 level, and now we're about sitting at around 39.15 or 39.18. And it's going to keep on climbing upwards. So we'll see what happens going over the next several weeks. Again, seasonal trends are positive right now. Seasonal trends are bullish. And as those seasonal trends start developing into the end of the year, we have the last 5 trading days of the year and the first 2 of the new year. That's the Santa Claus rally period. It's kind of it's been mixed over the last 5 or 6 years, but by and large, it's been positive. Sometimes it's been really negative on the first 4 or 5 days, and then it's been strong the last couple of days of that period. So we'll see how things unfold here. We are modestly overbought right now. Let's take a look at the oscillators here for a second. Take a look at the okay, you can see here 131 on the NASDAQ, 164 on the New York Stock Exchange. So we are moderately overbought here. We've been above zero for quite a long period of time, since October, which is pretty astonishing here on the New York Stock Exchange. So we've been above zero for a while. The price oscillator turned positive yesterday as well too. It went from down to up. So there's a lot of buyers coming in into the markets right now. That's all I can tell you. I still think we are in a bear trend, a bear market over here. It could certainly flip in a couple hundred more points on the S&P 500 and start looking better. We took a look at new highs versus new lows, and that indicator didn't tell us much. Let's see if I can get that up here for you. Let's see here. Hang on. So new lows. Bring that up here for you. Here's a 5-minute bars, but what's important there is to see. Let's see here. They closed at around 16, plus 16. So can see that. Sorry, right over here, over to the right-hand side, at positive 16. Right. And what does that mean? That means basically 16 more new highs and new lows yesterday. We want to see this indicator above 100 especially for a couple of days. But being the positive for about 4 or 5 days in a row, which we've seen that, is a good thing. But until this indicator turns uber bullish, which would be again above 100 for a couple of days in a row, we're still going to hold on to our view that we're still in a bear market rally. So I think it's going to be it, everyone. I wish everybody a great day, great trading day, and God bless Christine McVie. She was a wonderful singer. She had a beautiful voice. She was great with Fleetwood Mac. I'm sure I know a lot of you are sad this morning as much as I am too. And she's gone, but we always have her music to listen to and reflect on. And very uplifting. Have a great day, everyone, and see you Monday from hopefully from the same place. Have a great day, everyone. Bye.